What is up, you guys? I hope you had a phenomenal holiday and a good break. Today, Tesla was up 1.65%, ending the day at $256.71. I'm still holding my calls for February. We're going to be talking about that in this video. We're going to be talking about where I plan to average down. We're going to be going over the seasonality chart, a couple of analyst upgrades that have also come in, and we're going to go over the charts for Tesla because the 4-hour and the daily chart are looking very good. And I'm also going to give you 2 trades that you guys should be watching for the next week or 2. If you aren't already following me on X, please go ahead and do that. I post all of my real-time updates for this YouTube channel over there, as well as trade ideas and much more. As we go into the last week of this year, historically, we normally have what's called a Santa rally. And as you can see here over the past 13 years, about 57% of the time, Tesla is green. If we were to go and look at the S&P 500 as a whole, you're going to actually see that 68% of the time, the S&P 500 is green in December. So historically, the stats favor us. Now looking to as well ahead, that in January, 62% of the time, Tesla is green. Moving down to most recent analyst estimates, you're going to see that within the past week, we have had 3 analyst estimates, 2 of them from RBC Capital and 1 of them from Wedbush, all 3 of them being a buy, with this one by Guggenheim as a sell on December 15th, and then Deutsche Bank on the 14th as a buy. And from a technical analysis standpoint, you're going to see that we are trading in a bullish trend currently. As of right now, the bulls have the trend, and we are up over this major trend line resistance that we've been covering on this channel for a couple of weeks now. Something else I want you to note is going to be the change of character I have marked here as CHOC. Once this resistance level gets taken out, there is a 75% chance that we will move up into this next target, which for Tesla is up at $263.22, setting a stop loss down at about $226.52, which I've been in Tesla calls basically since down here at about 237. Now with those statistics in mind, I want to turn on our premium Pine Wave indicator. And this is an indicator that you can get within our Discord community, the second link in the description. This is going to highlight some very important information. These 3 blue lines that you will notice here are going to be our pivot levels. These levels are extremely important because these are basically going to be our stop and go levels. If we break over this resistance level, this is basically our green light to move our way up to our next price level. So what we could actually do is take a horizontal block and we can just draw a green block up here, stating that once we're over 260, our next level is 277. So if we're in calls, that's what we're looking for. The opposite side of that spectrum would be a break below $246, which would signify a pullback down to about $240. Now, something to notice is there is a very big bullish order block, so a very big bullish order sitting down here waiting. And I would assume that if Tesla does pull back down to $239, that this will get bought up very quick. And I am actually planning to double down on my February calls down here at about $239 if this occurs. And if you want to go back and watch the video that I put out last week, where I covered how last time this exact setup happened, we even pulled back 10% and then rallied 80%. If you want to see that full video, most recent video posted before this. So with these pivot levels in mind of about $260 and $246, we're really just waiting. I don't have a full position in play right now because, as we stated, I do think there's a chance we could see Tesla pull back, but I don't want to not be in any position because if Tesla really does push through 260, with how many times we have rejected and how much this thing has been squeezing, I believe that the move from 260 up to 280, which is where our liquidity level is, would happen probably within a week or even a couple of days. Once this liquidity level is hit, we will either do what's called a liquidity grab, which is a fake push right through it and then a quick retracement back down, or we'll use this as a hard resistance and pull our way back down to about 265. So my current plan right now is to hold the February calls that I currently have. The full position is over on my X account. And then what I plan to do is actually average down on these. I'll type average down if Tesla pulls down to 240 bucks. I will then be looking to actually stop out of my position at about $226, since that would be a break of order block support and we would no longer be trending up. If we do bounce and run, I will actually plan to start to scale out of my position, meaning that I'm just going to sell half of my calls up at about $276, and then my final scaling out or my final sell or my final take profit will be up at about $300. And no matter how this plays out, I'll be happy. I don't care. I'm not somebody, and you guys also shouldn't be this way, but we should never really care about what the next trade is going to be. You should always care about what your P&L is going to be over a sequence of trades. I know from doing this for nearly 9 years that when I see this type of setup, that there's about a 75% chance that we will see a breakout here. If I can get an average price of about 245, take my profits up at 300, that's a 20% move up, and then stop out down at 226, which is an 8% pullback, I'm more than happy. That is more than a 2.5 RVR, and I know that I have at least a 75% chance of profitability. So what we'll really be watching for is the break over 260 bucks. Now let's go over and talk about 2 stocks that I'm currently in and that you guys should put on your watch list for this week. Number 1 is going to be Amazon. This is a 1-hour chart, and you're going to see that we have a symmetrical triangle pattern forming. This occurs where we have a resistance making lower highs down to a fixed point, which is about $154, followed by higher lows into that fixed point, which therefore is called our apex zone. And what tends to happen is this is a continuation pattern. So in this instance, Amazon stock has been going up. The continuation would be to the upside. So what we're going to be looking for tomorrow is a break and a push through this resistance level and really clearing $154.23. If we can break over this level, there should be no problem with Amazon running back up to $156, which is only a 1.5% return, but with some call options, this could definitely be worth taking. From there, our stop loss would be set at a lower low at about $151.25. I definitely think that at this point, this is something that's worth taking. Historically, this has about a 75% chance of profit, and with a 1.5 RVR at this moment, it is definitely a trade that I am taking. And the last stock I want to talk about is going to be Microsoft. As you can see here on the daily chart, we have finally pushed through this resistance level that I've been posting about and talking about on my X account. Once we push through this level now for 1, 2, 3 days, we have been holding over our trend line. Last week, we had 2 pivot levels that were very important. Our previous week high at 376, which is going to be a very important level once again, and our previous week low at 368.50. As long as we can push and hold over 376, we should see Microsoft move its way up to about $384.17 to hit that liquidity zone and hit a nice little profit. So going into the next couple of days, I would be looking to enter this trade, setting a very tight stop loss down at about 372.12 and a take profit up at about 384.50. My biggest thing I want you to walk away with today is to understand that with this being the last trading week of the year, you don't have to force anything. I know that so many people want to come into the community or come into this or learn how to trade and start making money. And I know that it's not something you probably want to hear, but it should really be your last focus. Your focus should really be on learning the craft, learning how to think in probabilities, understanding trading psychology, focusing on developing and building an edge. And if you can do all of those, which I'm not saying is easy, then you can focus on actually being consistent and profitable. And when you can be consistent and profitable, money will easily come your way. If you guys want to learn how to trade with me every day, get access to all of our trading material and all of our private resources, check out the second link in the description to become a member of our private academy. Thank you guys for all the support. I'll see you next time.